Oh, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, we're going to focus a lot of the time on the move in gold. And first and foremost, I want to get your thoughts on what's going on right now. And this is this at least short-term pullback in gold. And it's arguably very natural because of how overbought gold got, the most overbought since 2011. However, that's also a very positive sign because 2011 was a great move, at least for some of that year, in gold. But now that we're seeing a pullback, everyone is saying that it is natural. I want your opinion on what the technicals show and what you would consider a positive pullback. I know it seems contradictory, but it is an actual thing, a positive pullback for the precious metals or gold.
Well, Corey, a positive pullback is all about successfully retesting what was former resistance. So in gold's case, when we're looking at the daily chart, we can see a gap here, which we talked about in our pre-show prep. Maybe it's from 1350 to 1360, where the market just really took off on last Thursday after the Fed meeting. And of course, if you're going back a week or two before the breakout and you're looking at, where's this resistance, this multi-year resistance, it's, 1360, 1370. So a successful pullback would be gold basically retesting that resistance. And there's no rule that it has to come back and test 1360 or 1370 or 1350. I mean, I'm not sure if it's going to retest 1380 or 1365, but a successful pullback and retest would be declining into that range. And then you see strong buying pushing it back up after that retest. Now, Corey, Friday is coming up, so we're about 2.5 days away. That's the weekly close, which is important. And it's the monthly and quarterly close. So this is a really important close that we've been talking about for weeks. Even since last month, I was talking about the quarterly close. I'm looking at gold. It's at 1417 right now. The quarterly resistance was like at 1330, 1333. Monthly resistance is around 1360. So I don't see any risk that we're gonna lose the quarterly close above 1330. Monthly close, maybe 1360. That's important. So even if gold closes Friday at 1370 or 1380, that really wouldn't bother me because that would be a strong monthly close and a really strong quarterly close. So that's really what we want to see. I mean, as long as that happens, I'm less concerned about the actual pullback. But, Corey, the market getting overbought, I mean, that's what happens when you have major breakouts and you have new uptrends forming. Things like sentiment indicators, the RSI, they're going to get overbought. But that's what happens in a bull market. That's what we want to see. I mean, what's the other scenario where gold doesn't break out and it stays at 1340, 1350, and the RSI is less overbought? There's less momentum. There's less people buying in the market. No, that's not bullish. It's bullish when a market breaks out like it's done and it registers these extremes in sentiment and momentum. But again, that's what you want to see in bull markets. That's what you want to see in breakouts. And I just, not to belabor the point, but I just recall, early in my career, the stock market recovering in 2003, 2004. I mean, in 2003, the stock market was just extremely overbought right away, but it stayed that way for a whole nother year or two coming out of that bear market. So when you get into a new bullish trend or you break above a major level, you have to be very, very careful about using momentum and sentiment indicators to predict, bearish reversals and corrections.
Yeah, all right, Jordan. There is some good comments there, and you're absolutely right that a bull market does get into overbought territory and stay in overbought territory. So that's what we need that to all keep going. Even Gigi agrees with us there. Can we also talk about the gold and foreign currency valuation? You've been following it closely. How close did it get to all-time highs just this week?
A couple days ago, I believe it was within 4.6% of an all-time high. And the all-time high, I think, was actually in 2012. It gave a false signal there where it made a slight new all-time high when gold and dollars rallied back to 1,800, but not 1,900. So, again, within 4.6% of an all-time high. And I mean, that's really encouraging. So the next assuming this breakout holds, we should get another leg higher. And on that leg higher, you're going to probably see gold and foreign currencies make a new all-time high. And again, that's just gold. Another way to look at that is gold multiplied by the U.S. dollar. And look, so I mean, making the presumption that we're going to have a successful retest, gold's going to rally, up into the mid upper 1400s. If that happens, gold against foreign currencies, that could reach its all-time high or retest that, around the time gold probably tests 1500. So that just tells you how much stronger gold is in real terms against foreign currencies. And Corey, that's what we want to see. We want to see gold rising against all currencies, really against everything, frankly. But, first, you have to see weakness in the dollar. Second, you have to see gold rising against foreign currencies. And after that, you have to see gold rising against bonds and stocks. But, I mean, that's another question.
So, Jordan, this all takes us to what is driving this gold price higher. And it isn't because inflation is booming. Inflation expectations are actually lowering. But it is, to your point, something you've been calling for, is that gold will start running and break out when the Fed cuts rates. Now, they haven't cut rates yet, but the expectation is July. And these moves, typically, as you have outlined, do happen about a month to two prior. What do you have to say about what is driving this gold move? It really, in my eyes, deals with fear and, central bank easiness. But what do you think?
Yeah, it's an economic weakness move. This is not a rising inflation expectations move. And you can see that with the curve inversions. And, just to step back for a second, that's actually a risk, is if we see bonds are extremely overbought, yields are very oversold. So we could see a rebound there in yields at some point. So that's a risk to gold. However, if we see longer term yields rebound more than short term yields, that's when you get steepening in the yield curve. And when that happens, it's bullish for precious metals. But when that happens, then you're in a rising inflation expectations situation. Well, not all the time, but some of the time that can be the case. So I think if and when that happens, that's when you're going to see silver outperform gold, because a lot of people are complaining. I mean, I even saw some people on Twitter talking about silver manipulation. I mean, sorry, but that's just ridiculous. We have a breakout in precious metals and people are still talking about manipulation. The fundamentals here are, this is an economic weakness move. This is Fed cutting rates, or about to cut rates. I even saw something that said the market is pricing in, I think, 4 cuts in the next year. So this is an economic weakness move. It's a Fed rate cut move. It's the kind of move when silver should be underperforming as it is. I mean, this is the kind of move that's bullish for gold, that's bullish for bonds. Now, when we get the steepening yield curve amidst Fed cuts and inflation expectations start to pick up, that is when you're going to see bonds and silver flip. That's when bonds will sell off and silver will do better and outperform gold in that environment. So we're not there yet. But as far as where we are here and now, yes, it's an economic weakness move, Fed cutting rates. And I mean, it's things look to be right on cue.
So to your point about silver and bonds, what about gold stocks? When do those start outperforming and breaking higher?
Well, it looks like a couple weeks ago. I mean, if you look at the gold stocks against gold, I mean, those ratios have been zooming higher in the last couple weeks. The GDX to gold ratio, I think it was at a 52-week high. I checked it yesterday. But look, if some people are concerned that, we've seen, the gold stocks they've made lower and lower highs while gold's been steady over the last couple of years. But you could have said the same thing in mid to late 2008. I mean, when we had the rebound in precious metals, then before that point, I mean, the miners were lagging just horribly. Silver was lagging horribly. But then what happened? Silver eventually went up about sixfold, in a 2.5-year period. The miners and some juniors made spectacular rebounds. So I think people are kind of they're too concerned about what's happened the last couple of years, and they're saying, well, the gold stocks have underperformed. I mean, historically, what happens is the gold stocks underperform most of the time, but when gold gets ready to make a move or it breaks above a key level, then you see the gold stocks really outperform and really lead. And I think that's what we've been seeing, honestly. Just looking at the action over the last couple of weeks, the miners they've been outperforming. They've been confirming this move. And even just, we're seeing the miners did open a lot lower today, but we're seeing white candles. So that early weakness, Corey, I mean, assuming it holds, it's being bought. I mean, we're seeing white candles in the miners today, but when I look at gold, I see a red candle. I see a red candle in silver. So even just looking at today, when it looks like gold has started to correct, we're seeing buying in the miners. So I'm not at all concerned with miners underperforming or lagging. They're thinking about what's happened over the last couple of years and not what has started to happen in the last couple of weeks, and even what's happening today. So I'm not worried about it one bit.
Okay. No, you're absolutely right. It's almost a different playbook that gold investors need to be reading off of now, and finally a bullish playbook. And just a final comment regarding the buying that is coming in today and actually has been coming in really ever since that Fed meeting. We're actually seeing buying coming in during the U.S. trading session. That's a big difference from what we have been seeing over the past, number of years, where it almost seemed like if gold opened the day up, it would get generally sold off throughout the day, or at least we wouldn't see more and more money coming in, a general buying attitude. That's a big difference, isn't it? And it is something we've been seeing in the last about week now.
Yeah, we're seeing big buying. We're seeing accumulation. We were seeing more distribution. As you noted, early strength was being sold. Overnight strength was being sold. That's different from what we're seeing now. And I guess we'll get, if we get a strong weekly, monthly, and quarterly close this Friday, that kind of gives it the all clear. Fundamentally, things are in place. And look, we're going to have a really strong run for the rest of the year as long as the Fed cuts rates a couple times. So that's the only caveat. If the Fed maybe they only cut once and they kind of change their mind about something, I don't see that happening. So look, the fundamentals are in place now. They weren't months and months ago. They're in place now. The technicals are confirming it, and we just have to be patient. Let these cuts come in, accumulate weakness, and just buy and hold, because this is the time you want to be a buy and holder. Because I think maybe it remains to be seen, Corey, if we're going to be like in a 2 or 3 year bull market here, or if this is just a big move for only 6 or 12 months. I don't know. It's too early to tell. We'll talk about that in the weeks ahead. But for here and now, this market looks really bullish, and people have to get involved sooner or later, because if you sit on your hands and wait and don't buy weakness, you could be missing a heck of a move.
All right. Well, Jordan, good comments, and hey, finally encouraging for the gold bulls and all those invested in gold, because this is very much looking like a bull market move and could be very much at the early stages of it. Jordan, thanks for your time today. Everyone, click that link below. Go visit Jordan's site and follow along with how he is trading and playing the metals sector. Thanks, Jordan.